Hello everyone. Good morning. Uh, you're welcome to this edition, this morning training. We will try as much as possible um to be as fast as possible. I just want to plead with us to give few more minutes. I see that we have a good number of persons already. Um, so let's just give some 5 minutes. This is 5 minutes past 10. So once it's 10 minutes past 10, we will start. So hopefully we have, but once we have up to 45 persons before that time, we'll just start. Okay. So just in the next 5 minutes, we will begin. Thank you for your patience. Okay. Yes, I think we can start. We have 2 minutes more, but like I said, once we have up to 45%, we will just get right into it. Good morning once again. Um, Thank you for your time. I promise that we will not be here for too long. But of course, the idea is to make sure that whatever I'm saying today, you understand as much as possible. So when we're talking about too much, we will even be looking at some very, very basic things. Uh, of course, the topic it's something that maybe some of you might have heard about, some of us have not heard about, but trust me, it's something that you're going to understand, something that so people are so nice this Saturday. Look at everybody's just greeting themselves. Good morning, everyone. Good morning. That's lovely. Oh. That's a good sign. That means the class will be a very smooth one. So let me share my okay. Well, you can already see the topic we're talking about. We're looking at SMC. SMC trading. And SMC trading stands for smart money concept. Before we talk about SMC, we want to look at very importantly what we mean by market structure, because these things form the basics of or they form the core. Market structure forms the core of SMC, smart money concept. Now, smart money concept, something that was brought up by recently developed strategy that try to look at the interactions of the market, especially when it comes to institutional traders, right? The big firms, how we can properly follow them, how we can properly identify their footprints and actually follow it, right? So let's jump right into it. Let's begin with what we know, which is trend, right? Let's begin with trend. What do we mean by trend? When we talk about trend, I'm sure that we all know the general direction of price, right? The general direction of price. Trend could be uptrend, could be downtrend. Now, that's not really what I want to talk about when I talk about trend. I know that we know about trend, but the truth is that many persons at one point or another might not have been able to properly, how will I say it now? Look at a trend and try and find out the behavior of a trend. When it comes to trading, we may not have one thing that works 100% of the time, but we can find a pattern, a behavior, a general behavior of price, especially when it comes to trade. Yes, you know that the trend is uptrend, downtrend. Of course, there is also sideways trend. That is when the market is ranging, right? But at the end of the day, how do I work with an uptrend? How do I work with a downtrend? Am I just going to buy because it's an uptrend? Am I just going to sell because it's a downtrend? Where am I buying? Where am I selling? Because trust me, apart from knowing what the trend of the market is, another important thing is where. Where am I joining the trend of the market? Oh, yes, it's an uptrend, but where am I buying from? Oh, yes, it's a downtrend. Where am I selling from? Because that's very important. That's why sometimes you spend a lot of time, you spend so much time on a trend or on a trade because of where you enter the market, right? So, yes, we agree that when it comes to trend, we have the uptrend. An uptrend is made up of higher highs and higher lows. A downtrend is made up of lower highs and lower lows, right? We know that. But let's try and let's go to our chart. Let's try and see what I'm trying to explain when it comes to a trend. Okay, and this is something that I love to talk about because personally I feel that it's something that actually helped me in really understanding the behavior of the market. Okay, it's really helped me in understanding the behavior of the market because now, uh, when I first started, of course, I knew the trend is your friend. When the trend is on an uptrend, it's very good that you look out for a buy. When market's on a downtrend, it's very good you look out for a sell. But it was hard for me to now discover where, because yes, sometimes I'm actually looking out for a buy, but where I buy from is the problem, right? So I'll just share my screen. I'm working on that so that we can see and try and put a face to this uptrend, downtrend thing, right? Okay, let me share my chart with us. So remember how we talked about an uptrend and a downtrend, right? We said uptrend, we said downtrend. We will now look at, this is Euro USD, which I'm sure many of us are familiar with. We will try as much as possible to try and map out the behavior of this trend. I want you to just flow with me, okay? What we are saying may not work out most of the times, but we will see a general behavior. So I'm going far back, I'm going as far back, just to properly. So let's begin from here. Sometime in January 2022, right? I hope we can all see my chart, right? This is Euro USD daily time frame. We want to try and understand what we mean by a trend. What happens? How can we map a trend? Now let's look at this. Now we'll notice that what happened here, let me even move further backwards, right? Now this particular market that you see here like this, what will we refer to this particular trend as, please? What is this trend that you see on your chart? What will you call this trend that you see on your chart, guys? This particular trend that you're seeing like this is a downtrend. Thank you very much, Matilda. Matilda is the first person. A downtrend. Now, this particular trend is a downtrend. Now, what does that mean? It means that generally, right, prices are headed downwards, right? Generally, prices are headed downward. That's what it means. But you will agree with me that even if prices are headed downwards, price did not sell every time. And this is where it's very important for us to understand that, yes, even when it is glaring that is a downtrend, it does not just mean that the market will sell every time, but what it means is that the market will sell more than it buys. The market will sell more than it buys. Okay, so yes, it's a downtrend. Doesn't mean market will sell every time. It just means that the market will sell more than it buys. So let's look at this. Let's look at this. If we notice the behavior of price from here, like this, I'm going to be using these lines to help us properly understand what I mean by price movement. Now, for me, a price went up, right? When price went up, let me zoom in a bit so that everyone can see my chart. Very good, good. Now, from here, what the price do? Price went up, right? Now, when price went up, from that zone that price went up, price came what? Price came down. Even so much that when price came down, price came lower than the last point. Now, let me explain something to us about highs and lows. This place like this now, where price made this is a high, right? Price came down, price ranged here. This place like this, you see this place that price sold to and now bought a bit. This place here is a low. Okay, from here like this, that price bought up to this point. From here, okay. I know how to even make it easier for us. I know how to make it easier for us. Let's take it one at a time. From here, okay, price bought to this place. You see this place price bought to, and then somehow price now sold a bit. This place here is our first high, right? That particular point is our first high. We can call this place our H1, which is what? Our first high. This place here, because this is the highest price, this is the highest point price got to before it retraced, before it sold it. That's our first high. Now price retraced from there. Then what did price do from there? Price gave us a what? A higher high. Okay, so this is high and this is a higher high, right? Very good. So if we're marking this place, what will we call this place? We'll call this place H2, right? We'll call this place H2. So we have high 1, high 2, right? From that zone, what does price do? Price decides to what? To sell. Price comes down to this point. This is the lowest place price got to. This is the lowest place price got to before it retraced and ranged around this point here. So and then from there, what did price do? Price pushed up to this place. We'll call this place high 3, and then we'll compare something. It just helps you to understand that you also need to be very much intentional about the trend of the market. Now let's compare our highs. First high, high 1, price retraces. price gives us high 2, price retraces. Guys, normally, right, price is supposed to retrace and push up and give us our high 3 is supposed to be higher, right? In the spirit of the trend, in the spirit of what high 1 and high 2 has done, high 3 is supposed to be higher than high 2. But what has happened here, guys? High 3 is lower than high 2. High 3 is lower than high 2. So that means something has happened. There is a change here, right? There is a change here. From high 1, high 2, there's a change. High 3 is supposed to be higher than high 2, but it has changed. And then from that place, it comes all the way down to this place. Now, as it came to this point, this is the place it sold to. Then from there, it pushed up. It pushed up to this point. It pushed up to this point. What do I refer to this place as? I refer to this place. This is my next high, right? This zone here is my next high. So let me call it H4. Now, what has happened? You will notice that after high 1, high 2, if this thing was a good uptrend, high 3 should have closed above high 2. But high 3 closes below high 2. And after that, high 4 closes below high 3. That means that what we have seen from the beginning, there's been a change. There's been a change to what we have seen from the beginning. It's very important that this very simple and basic thing, if after the end of this meeting within the next 40 minutes or whatever, if this is the only thing you can pick from this, if this is the only thing you can pick from this, it will help you in a long way. It will take you a long way, because you can now, before you just go into the market and place a trade, and this is very important. I want to say this. We have a very good number, so let me say this. A lot of us nowadays, our best strategy, the best strategy we have, is to trade during high impact. That is not a strategy at all. In fact, that is closer to gambling. The only thing we now do is to trade high impact. What do we do? Before the news comes out, we put buy stop, we put sell stop. You make and that is the only way you trade. You are trading whether the market goes up or goes down. Let me see. Now, most times, market now begins to, maybe the first, the second, the third time, you make profit from it. Now, all of a sudden, you are having issues with slippage. Okay, volatility is not enough. Price takes your buy, takes your sell, and all that. You begin to complain. No, a strategy, even when you are trading your high impact data, you should be able to look at the trend of the market. There is nobody that would make consistent net profit just trading on only high impact. What that will do is that maybe it gives you 1 or 2 good times, and then for the rest, because you are the mercy of sentimental response to the move of the market. What do I mean by sentimental response? At the time the news comes out, what is happening in the market at that point is noise, sentiment. And if you're not careful at that point, you can be carried away. A good trading strategy, a strategy that can give you consistent profit, is about looking at the behavior of the market, the trend of the market, the technicals of the market, and then backing it up with fundamentals. That's what helps. Not just somebody who is only interested in trading when there is high impact, and you don't even understand what the high impact is. So you just go to your chart, put buy stop, put sell stop. It's dangerous, right? So let's continue from there. Now, back to what I was saying about this trend, how you have a H1, price comes down, you have a H2. But H3, H4, they're actually what? Lower, right? H2, H4, actually, it comes down to this point, tries to push up, and then gives us another what? Another high, which we will refer to as what? As H5. So I want to explain, I want to paint a picture here. I want to paint a picture. Let's say that somebody was on a buy from this point like this. Let's say somehow someone was on a buy. But such a person noticed that instead of price to give a higher high, price gives a lower high. One of the first thing you need to do at that point is to understand that your buy trade is no longer in line with the market. Do you understand? And this is not only on the daytime. If you are trading on 1 hour, you have a buy. And so because you have a buy, you expect price to be giving you higher highs and higher lows. But instead, price gives you consecutively two lower highs. It tells you that there's a high chance that that buy is already against the market because the market now is giving you a downtrend. At that point, it's better to close the trade. And that's why sometimes some of us just leave trades running for a long time just based on hope. You need to be able to trace the behavior of the market. You understand? Hey, so you need to be able to trace the behavior of the market. As you trace the behavior of the market, especially from a higher time frame, you trace it down to a lower time frame, you can now take the best decision. I'm telling you, if you trace the market from a higher time frame, if I trace this market like this, seeing that this is a downtrend, I can now go to my 1 hour, I can go to my 30 minutes and look out for places where I can sell because I understand the trend of the market. I've looked at the market I've seen the bigger picture of the market. Yes, doing this does not mean that 100% of my trade will be in profit, but it will help me to achieve at least 70% so that I am making consistent net profit. So let's do this now. Let me continue. If we notice, this is where we started from, right? This was a low, right? This next place that we got to was a higher low, right? Good. Then price now came here, price gave this next low. If you still check, this is low 1, low 2, low 3, still higher, right? But somehow price now came and gave us this low here. This low has become lower. So that means that character of the market was changed. The behavior of the market was changed. The structure of the market was changed. You understand? And at that H3, at this H3, that uptrend that you know has now changed to a downtrend. And so what you should be looking out is for sell opportunities. What I have just done now is to explain to you how to trace the movement of the market in the most manual and easiest way. Without the use of any indicator, without the use of any software, you can see the flow of the market. Now, if you're looking at some markets and the flow of the market is not clear, it's okay to leave that instrument and check something else out. I'm telling you, guys, even on this Euro USD, if we go down, there are places where it may not be clear. There are places where when I check it, even me, sometimes I look at the market, I see instead of it to be able to give me a good higher, I'm not seeing something clear. I leave it and check something else. Right? So the truth is, as you now begin to apply this, you get better and get better, and then you can take opportunity. Now, the first thing I've done is we've been able to map out a trend. We've been able to map out a trend. Now, another thing is, even if we know, okay, even if we know that I'll get to the questions. I just want to make my point that I'm not mixing everything up here. So even if we know that this market is a downtrend, the question is, where do we take our sell? It's possible for us to be able to tell where we can take our sell. Now let's do something, guys. Let's do something. Let us see, okay, that looking at this market, we agree that this market is a downtrend. We agree that the best thing to do is to take a sell, right? Very good. Now, where do we take a sell? Let's look at this trend. Let me make it clearer. Let me make it clearer because of what the next thing I want to explain. Let me make it clearer. Very good. So, because that's the next question. Oh, very good. Sam, it's a sell. Okay, very good, very fine. But where do I take my sell? Of course, this is daily time frame, right? It's easier to analyze the market on a higher time frame, or it's advisable to analyze the market on a higher time frame and look for trading positions on a smaller time frame. That's very possible. But let's do this. Let's first of all at least just try to see something. Do you notice that when price makes a low, when price makes a low, price returns to the upside before it tries to make a lower low? When price makes a low, price returns to the upside before it makes another low. Once it finishes making another low, it returns to the upside before it makes a lower low. Once it makes a lower low, it returns to the upside before it makes another low. This tells us that, first of all, before I even go into proper examples, first of all, if you are trying to trade in a trend, the best way, the best time to enter into a trend is during what we call retests. During what we call what? Retest. Let there be a retest. Let there be, because I'm going to give us proper examples of with Euro USD, and we're going to look at our chart. Let there be a what? Retest. What do I mean? Oh, price has made a higher high, right? Price has made a higher high. Let price retest. Let price retest. Let's go into the example. I'm going to make this example in two parts, right? I'm going to make this example in two parts. Let's look at this. Let's trace Euro USD. Let's trace Euro USD. If you can tell, this price here started making higher highs, right? Started making higher highs here. Now let's look at it. Let's look at the movement of price. Price came down to this point, right? Price went up. Price came down. Price went up. Now, if you check, I'm going to be marking the highs of the market. I'm going to be marking the highs. This was the last high. All the time that price was here like this, all the time that price was here, this was the high. This is the highest point, right? But somehow price was able to break it, isn't it? Price was able to break above it. This particular candle here was able to break above it, right? What did the market do? As price broke above it, price returned back to that place it just broke. Price returned to that place it just broke. So that's why you see this place that is my high point here. When this candle broke above it, price returns to where it just broke before pushing up from there. Price returns to where it just broke before pushing up from there, which means that that place that price just broke in your uptrend, that high that price just broke in your uptrend, is better you expect price to return to that place before you follow the trend with a buy. Let me explain it like this. These price zones are just like story buildings, or just like let's say like a 3-story building. When price starts from the ground floor, or when you start from the ground floor, right? What happens? If you're on the ground floor and you're looking up, you can see the ceiling and the floor. But when you take the stairs to the next floor, when you take the stairs to the next floor, you remember now you're no longer on the ground floor, you're now on the first floor. You see that place you were seeing that was your ceiling when you were downstairs? That place is now your floor. That is how the market performs here. When you have a high like this and price breaks it, price returns to that place you just broke to get momentum to push to the upside. Another example, look at this place here. After price broke up to this place, this was the last high that price made. This was the last high that price made. Price came here, price was trying to break here, price could not break it. Somehow price broke above it. Price broke above it. But what did market do? Market will return back to where it just broke. To that place it just broke. To take liquidity from there before it continues further up. Okay, now when price went to this place, this was the next high that price made. This was the next high that price made. Price could not break. As price pushed up here, price made this high. Price could not break above it. Price could not break above it. Price could not break above it until price was able to break above it. But what happened? Even when price broke above it, do you notice that price came back to that place it just broke? It came back there before it pushed up. Came back there before it pushed up. So yes, the first and most important thing is to be able to tell the trend of the market, to be able to map the market and say, oh, this is higher highs, this is higher lows. Oh, the fact that this market is giving me at least 2, 3 consecutive higher highs means this market is on an uptrend. But the next thing now is, oh, where do I take my buy from? Yes, this is an uptrend. An uptrend I'm supposed to buy. But where do I take my buy from? I will not just buy once the market breaks the structure. I will not just buy once market breaks. I will wait as market has broken. I'll wait for price to return back to that place it just broke. And there I can buy along with the market. You see, this thing I'm telling you now is simple. Like, I mean, it's not too complex. It's not about further mass, but it forms the foundation of a lot of profitable trade. You can apply this to whatever indicator you're using, whatever software you're using, whatever strategy you are using. You can use this to tell the best time to go into a market. If you have a software or you have an indicator that alerts you and says it's time to buy, it alerts you on 1 hour that it's time to buy. You can go to 15 minutes and try to confirm the best place to buy. Because whenever structure is broken, of course, not every time, but most times when structure is broken, the best and safest place to join that market is to wait for market to reverse or retrace to that place, and then you can buy from there. Now, let's do an experiment. Somebody who bought from here, okay, because after all, he bought from this place I just marked. Why? Because price has broken. He say, oh, price has broken this particular zone, this resistance zone. Price has broken it, so let me buy. It's not wrong. Price has broken it. Yeah, let him buy. But you notice that such a person will need to wait for a long time before price comes back in his favor. And that's why most times we are on trades of 5 days, 10 days, 15 days, 13 days, 2 months, hoping and praying for the market to return in our favor. Somebody who enters here, remember this is daily time frame, but we're just doing an analysis here. Somebody who enters here because, oh, this candle has broken this point, has to wait all this while. Now, somebody who enters here when market retests that place, does not need to wait for too long to go into profit. Now, let us even say, let's say both of them, it was a bad trade. Let's say somehow price got here and continued selling. The person who entered here will lose more than the person who entered here. And that is why trading is about managing your risk. Trading is about making more than you lose. So if you use a good strategy, if you work with the market structure and you enter at safe zones, you can make more profit. And even if it is not a good trade and somehow the trade still goes against you, which is normal, you will not lose as much as somebody who just enters based on sentiment, who just enters based on excitement. Oh, look at the way Euro USD push up. Oh, let me buy. No. Once price breaks a structure, let price return back towards that zone, and then you can follow the market. You can follow the market. And now, we now notice that, oh, this is the new high. This is the new, as price returned towards this place, price broke into this high, right? This is the new high that price broke. This is the new high. So what entering from here like this would have given us very good profit. Let's still continue to trace this market, right? Let's continue to trace this market. Now, from this high point, we expected that price will retrace a bit and give us a higher high, isn't it? But in this case, price came down to this place. Price came down to this place. What did price do? Price broke below it. This is the last point. This is the last low point. This is the last low point of the market. This is the place that price got to, pushed up. Oh, we've made good profit from it. Now, we expect that normally in this uptrend that we have established, price is supposed to retrace a bit, okay, and trade to the upside, but price returned to that zone and price broke it. Now price has broken that zone. What does that mean to us? It means that there is a change in that upwards move. There's a change. So now our head is no longer thinking of buy opportunities. Our head is thinking of sell opportunities. Now price now retraces up, comes down and breaks this point. Price breaks this low point again. Look at it. Price breaks this low point and comes down. Now that price has broken this low point and price has come down, price has told me he wants to sell, but I'm not going to sell immediately. I wait for price to return towards the place it just broke, and then I can look out for a sell from there. And that is the behavior of the market. Look at this. Let me show us something amazing. Let me show us something amazing. Let's still continue tracing this. Now from here, price ranged a bit and price was able to break above this place. Guys, this is the last high. This is the last high that price broke above. Price broke above this place. Do you know that price did not come back to this place? As price broke above it, remember I've told us that once price breaks above a zone, like we should wait for price to return towards it, and from there we can take advantage of the buy. Abi, now look at this situation. Price did not return towards this place until somewhere here. Price broke above it, price traded, price did not return to it until somewhere here. When price returned, price pushed up from there. Do you understand? So it is the behavior of a trend. Now, when price returned here, price broke above this place. The question is, anytime you want to take an entry in a trade, consider, oh, is this an uptrend? Yes, it is an uptrend. Very good. Abi, your first thing is to, I'm giving you the first step. What is step number one? What is the trend? That's the step. That's step number one. You can even write that down. Step number one, what is the trend? Once you can tell that the trend is uptrend, that let's say you tell the trend is an uptrend, like in this case, it's an uptrend. The next thing is, what is the most recent high in this market? What's the most recent high? This place here is the most recent high. This is the most recent high in this market. So my question is, I want to buy when price breaks this high. I want to buy when price breaks this what? High. And price actually breaks this high, breaks it here. When price breaks this high here, the next question is, oh, now that price has broken this high like this, I want price to return towards it. Remember when I tell people about price breaking a point, breaking a high or whatever, I always want the body of the candle to close. So in this case, this is where price broke this high. When price broke this high, price returned back to that high from there and push up. So my first point is, what is the trend? If the trend is an uptrend, my second point is, where is the most recent high? When I'm watching that high, once price breaks that high, I am waiting to buy, but I want price to return to that place and then I can buy from there. If the market is on a downtrend, the question is, oh, the market is on a downtrend. That means I'm looking for sell opportunities. Where is the most recent low? I'm going to monitor that particular low so that once price breaks below that low, I will wait for price to retest that low and then I can sell from there. Let me describe it. Oh, this market is on an uptrend. What does that mean? It means that the market is making higher highs and higher lows, right? That's what it means. Market is making higher highs and higher lows. Oh, I came into this market and I saw that. I came into this market and I saw that market was making these higher highs and higher lows. Oh, very good. That's an uptrend. Oh, but now that is here, right? Where is the last high? This place here is the last high. This is the last high. So I will wait for price to return towards, to retest that particular high zone before I follow the trend to the upside. If somehow, as this market is behaving like this, somehow price comes, breaks below this low, that means that there is a change of character in this market. The character of this market has changed. Price is now giving me a lower low instead of a higher low. So I'm now looking for, I will now watch to see what price will do. Oh, price returns towards that place. And somehow price gives me a lower low again, gives me a lower low. What does that mean? It means now I want to take a sell, but I'm not just going to start selling at this point. I wait for price to return towards that particular low it just broke, to retest that place, and then from that place I can take advantage of the what, of the sell. Now we are now going to use this to now explain how to now take, we're going to take some practical examples on this, because this is daily time frame. Not all of us, not many of us can just go do our analysis on daily time frame and trade on daily time frame. So how do you apply this to your trading? How do you apply the knowledge of market structure to your trading? Please don't forget the basics. The basic I have said is that, first of all, you need to identify the trend. You identify the trend by highs and lows, right? But whenever you identify a trend, the best time to enter a trend is when it tries to retest a recently broken zone. Now, so for those who are asking, so to respond to the question about I was saying that many of us, the strategy we have adopted in trading now is just to trade only high impact news. But I am saying it's dangerous. Why? Because if you compare, so especially maybe when you it's your how do I say this now? Most times when we trade high impact news, one of the most popular ways we trade high impact news is wait, so when it is close to the time of the news, place your buy stop, place your sell stop, isn't it? That's how we trade. But the truth is that I'm saying that you may not be able to build your account or build consistent net profit or make very good money from this business consistently using that strategy. Why? Because your strategy is based on some level of gambling and luck. Because when there is a high impact news in the market, okay, sometimes we can tell what the market will do, but what we cannot really tell is how the market will behave. At that first period of the market, a lot of things can happen. There can be spike to both sides. Price can take your buy stop, can take your sell stop. Also, we are having increasing issues of slippage. What is slippage? So many times when we place buy stop and sell stop in the market, remember that when you place a buy stop, you are telling the broker to fill your buy order once the market gets to that price. But remember that for the broker to fill your buy order, he has to match you with a sell order. For you to be buying, okay, you are buying at a particular price, it means that you will be matched with someone who is matched with a sell order at that particular price. But the issue with trading during high impact is that market is moving so fast, it is hard for you to be matched at the exact price you want to enter the market. And then once it's getting close, some of us begin to adjust our buy stop, adjust our sell stop, to be closer to price and all that. Doing that is hard for the broker to match your order at that particular price because the market is moving so fast. And so we begin to have issue of slippage, where the place where you put your buy stop is not where your trade is peaked. Just because, so I'm saying that sometimes market can move smoothly in your favor, yes, but most of the times you can, during high impact news like that, the market can be very, very volatile, to the point where the market is just going in different direction at a very fast pace. So if you want to make money from trading high impact, you are only hoping that the news should just be a news that goes in one direction. You cannot make consistent profits based on hope. Any strategy in this market that requires you to apply 1% of hope is not a strategy at all. It's not a strategy that can give you consistent profit. It can give you profit. It can give you big profit. But the next time another high impact comes, you put in money, it can wipe it. So what I was saying is that no matter the fundamental, even your knowledge of the market structure can help you to make consistent profits. In fact, there is a way you learn the market structure, you will even be able to predict fundamentals. because of price action. You understand? So I'm saying that you should not have a strategy where you just depend on high impact. The only time you fund your account to trade is when there is high impact in the market. No, it can work 1, 2, 3 times. For the remaining 5 times like this, it can work against you because it's a period where the market is moving so fast, and especially when you're using pending orders, it can be risky when the direction of the market is not in one direction. You understand? So I want us to be able, that's why I've explained that the class is not recorded. Class is not recorded. Okay. We had issues with that. It's not recorded, but that is why what we have done, we're going to take in this class one step at a time. What we have done, I'm sure that we all understand, because what I have been on the past 40 minutes is just one aspect, and which is the most important aspect: how to identify the trend and where to enter in the trend. So now I want to do, okay, what if the last higher high before a change of trend? How do you know? What if that is the last higher high before the change of trend? That's what I'm saying. I'm saying that if you are mapping price, you're mapping higher high, higher lows like that, it's hard for you to is hard. What I'm saying is that if you're mapping price, it makes you to be able to take better decisions in the market, right? You're able to be able to take better decisions, but you cannot be 100%. There are times when price makes a higher high, right? Retraces back to that point for you to take a buy, and instead of you to buy from there, something happens and it starts selling. What I'm saying, in that situation, yes, you would have lost, but it is better that you entered at that retest. You lose less than when you just go and enter at the high. When the market is on an uptrend, the best place for you to take a buy is on a support, right? At a retest. When the market is on a downtrend, the best place to take a sell is at a resistance. That's at a retest. You understand? And then when you talk about time frame, what I just explained to you guys on the trend is on the daily time frame. We want to do a practical example that will enable us to look at different time frames, so you see it. So yes, you're told when you start trading that the best time frame to trade is 1 hour. But as time goes on, you begin to understand that it's also very nice to what's the word? It's very nice to merge time frames together. It's nice to do your analysis from a larger time frame down to a smaller time frame. So me personally, if you ask me, whenever I want to trade, I first look at the daily time frame. I do. Okay, and then I trust it that if I've gotten my bias on the daily time frame, that this market is on an uptrend, I've gotten my bias on 4 hours, this market is on an uptrend, I may now go to something like 1 hour, 30 minutes to look for a place to enter that buy. So it's a combination of those time frames. The first time frame is the trend. The second time frame, the smaller time frame, is your entry point. Okay, so it's combination of those time frame. You understand? Oh wow, accumulation, manipulation, and distribution. We will not be taking that today. Not be taking that today, but that's also a very important topic that we'll look at. ACD. I'm sorry, AMD. Right? How do you determine the dominant trend? The dominant trend is the higher trend. The dominant trend is the trend that exists on the higher time frame, because that helps you to see more, right? You can be looking at trend on 15 minutes, looking at like an uptrend, but on daily time frame, the market is on a downtrend. Now, if the market is on a downtrend on daily time frame, and you're seeing that the market is on an uptrend of 15 minutes, what it just means that 15 minutes is retracing. What you are seeing on 15 minutes is just a retracement. Market will still follow the larger time frame. So that's why it's good to incorporate different time frames with your analysis, and that only gets better with time. It gets better with time. So you need to put in work, practice some of these things, look into it, and all that. Of course, fundamentals can break market structure. Ben is asking, can't fundamentals break market structure? Fundamentals can break market structure or change market character. But once they do that, okay, if a fundamental is strong enough to change market character, okay, what that will likely mean is that market is about to it's about to get a new trend. Now, remember that when we say change character, at the end of that fundamental, the body of the candle should have closed. Then you can tell. But most time price will just bam and be rejected. You understand? Retest. Thank you. Yes, be patient to retest. I just had to take time to go through our questions. Um don't worry, I'm going to provide you guys materials. That's not a problem at all. Okay. Now, can one see the trend? Which instruments do you trade, sir? Instruments, currencies, indices. When I started, I used to love indices, but now I trade more of currencies. But I still enjoy trading indices. Why? Because the beautiful thing for me now is because understanding market structure means I can actually enter any instrument and trade. You understand? So now I do currencies. I do say all I just need to do is I'm looking for market opportunity. So if I'm trading in this, if let's say I want to trade US 100 for instance, and I go to the chart, I don't see a clear market. I can go and check Euro USD. You understand? So now I'm not tied to one particular instrument because I now understand this trend and this basic market structure. There are some markets that I have a zone I have marked that price has not come there yet. Price did not come there this week, so I've not traded yet. And there are some which I've marked the week before. They came in last week. I was able to trade it. You understand? So NS is asking, can one see the trend completely with the phone? With the phone, you may not be able to get as much screen size as this, but yes, you can. You can look at the market on maybe on daily time frame of 4 hours. You can see more of the trend. Then also another thing you can do is you can turn your phone into tablet form, even your Android phone. If you go to your MT4, if you go to settings, you scroll down, you see tablet mode. Select tablet mode. What it will do is it will change your phone, make the graph, the chart, more like a landscape mode. So maybe you can see more charts that way. So let's go. Let me talk about yes. No, it's applicable to indices. Okay, let's do this. I trade gold too. I've answered questions. Now I'm going to go to our chart and let's try and compare time frame. So I will leave the chart for now. I'll leave answer questions, but you can also drop your questions. I'll look at that at the end. This is the next step now. I am going to try and look at the market, try and analyze the market from a higher time frame to a smaller time frame. Okay, just to show us how you can actually incorporate different time zones, and I'm going to do that across different instruments. I'm going to start with US 30, which we have here. I'm going to start with US 30, which we have here now. So we're talking about how you can properly incorporate the behavior of the market, right? How you can tell what the market is doing, how you can tell where to enter the market, and all that, right? Good. Especially when you are combining different time frame. US 30 as other indices happens to be, they've been on very good bullish move. That has been the fundamental thing. Dollar has been quite weak, and so US 30 has pushed up. But let's look at it. Let's just try and look at it, right? Now, let me zoom in again. Let me zoom in so we have a bigger. Okay, so here we have it. So if you look at the movement of price, right? Look at the movement of price. At least from here, we had price trade upward, give us a high here, retrace, give us a higher high here, right? Retrace, break this particular zone here. So the two zones that we had that price had issue with was here, right? This zone here, and we had price have another issue with this zone here. Right? Good. Now, in this particular case, okay, price, when price made this low here, remember that this low that price made is not lower than the last low. So it has not even signified, because when you check a low, You need to check the low before it to know if it is a lower low. So this is the last low here before this push up like this. Now price made this, price came this point, price has not broken this particular structure here. So we cannot still claim that this sell is very much active, right? Then price pushes up to this place, price is rejected, price breaks this zone. So what are we doing? We're expecting for price to return towards this place. We're expecting for price to return towards this place. We can take advantage of that buy. You understand? That's what we're expecting. Now, as price broke above this place, price did some kind of, didn't really come to this zone. And then price broke this place. This place again, price broke it. Price broke it. But when price broke it, price actually returned. You see that price US30 returns to this place here before pushing up. Now, what I'm going to do for us, as price returns towards this place, what we are going to do now on this daily time frame, we are going to go and check it on 1 hour. We are going to check as price return towards this zone. All I need to do, guys, remember I want to buy from here, right? Price retrace to this place you just broke. Remember we said, oh, when price breaks a zone, it's always good to wait for a retest, right? Now, on daily time frame, price broke this zone. Now I want to wait for a retest. Price has come to this place. How do I enter my buy? How do I enter my buy? So this is what I'm going to do, guys. We are going to mark this place, We're going to mark this place. I will give it a different color so that we can differentiate it. So I'm going to mark it as this coral red. Okay, so this is what we are going to do. As price returns to this zone, I now go and check this particular zone on, say, 1 hour. Okay, I go and check that particular zone on 1 hour. We marked it red. So we are looking for the zone that is marked in red, isn't it? That's what we are looking out for. I should have actually shrunk my chart. I should have shrunk my chart before so that it's easy for me to just trace the place. So this is the place. So let me just shrink my chart a bit. Let me shrink my chart a bit, guys. Remember what we did, right? We wanted to look out for a buy in this market, isn't it? Wanted to look out for a buy. So when price retested that place you just broke on daily time frame, we mark that place to come to 1 hour. Now, this is how price sold into that place. Low, price ranged here. Price ranged at this place here, guys. Can you see it? As price sold to this place, price retraced, price ranged here. So this is the last high, isn't it? This is the last high, right? This is the last high. This is the last high. This is the last high. So what happens? Price breaks that high. I want to buy. I want to buy. And I noticed that, oh, on that zone, don't worry, I'm going to do at least 3 examples. If you don't understand this example, don't worry, just listen to me. Remember on US30 on daily time frame, I wanted to buy. Okay, price broke a zone, and we have learned that when price breaks a zone, we wait for price to retest. Abi? Now, price broke that zone on daily time frame. It now came back to that zone it just broke. Now, I now went to 1 hour. I want to buy. So now that I've gone to 1 hour, I will also wait for price to break that zone again on 1 hour. So as I went to 1 hour, I now check what is the nearest latest zone. This is the place. This is the place price has been having problem with. Now, price has broken it. Oh, very good. I will now wait for price to retest that place. And then I can now buy from there. The buy I was looking for on daily time frame, I have now been able to take it on 1 hour. What did I do? On daily time frame, I noticed the break. I waited for price to retest it. When price came back to that zone, I went to my smaller time frame. I said, now I'm on a smaller time frame. I want to buy, but I want price to break the nearest high. As price broke that nearest high, I now waited for price to return to it, and I took my buy from there. So I've been able to combine daily time frame with 1 hour to place a trade. I have seen a trend. I've seen an opportunity on daily time frame, but I've been able to take the trade on 1 hour. But what I will do is, before I take any trade, before I take a buy, I must see that bullish break of structure. Before I take a sell, if it's a sell I'm taking, I must see that bearish break of structure. Let me take another example. Don't worry. At least 3 examples. Let's now look at, oh, okay. One more. Let me just show us that daily time frame side. This is it. This is the daily time frame point here. Price, this was the last zone when price bought to this place. You can use any, guys, you people are not following me. You people are just asking what time frame. You don't have to use, see, what I've said is you do your analysis on a larger time frame. You pick your trading opportunity on a smaller time frame. You can see a trend, see an opportunity on 1 hour and pick your entry on 15 minutes. You can see an opportunity on 4 hours, pick your entry on 1 hour. It's not about, don't always look for one specific time frame that is set into your head to place a trade. It's all about market opportunity. What I've said is that you can combine a larger and a smaller time frame to get the best opportunity. In this example I use, I combine daily and 1 hour, but I'm going to use another example where I combine 1 hour and 15 minutes. It's all about market opportunity. So instead of asking what time frame, just understand that if you see an opportunity on a time frame, you can actually do a better confirmation of that opportunity on a smaller time frame. So look at this one here. There was a Look at this. There was a structure here that price broke on daily time frame. This US 30 daily time frame. Oh wow, it's broken it. I want to buy. Oh, I expect that price will retest that place before I buy. Okay, now price has come back towards that place, but this daily time frame is so risky for me to just place a trade on daily time frame. So now that price has returned towards that place, what do? I go to 1 hour. I'm going to 1 hour to look out for a buy opportunity. So when I go to 1 hour, what do? Immediately I'm on 1 hour, I'm waiting for a break of structure. I'm waiting for a break of structure that will favor that bullish move I want to take. You understand? A break of structure that will favor that bullish move I want to take. So when I now go to that 1 hour and I see that break of structure, as price now broke that place that I just marked, I now waited for price to retest it. When price retested it, I took a buy from there. Let me show us another example. Now, somebody said, and rightly so. Somebody said it, and I'll say rightly so. Yes, you can set a pending order. You can set a pending order there. You can wait for the candle to get there. It all depends now. But you must have now seen that break of structure. You understand? You must now see that break of structure. Now, let me give this example. Now, look at gold. Let's look at gold, for example. Let's look at gold, right? I want to try and now I'm going to merge 1 hour and a smaller time frame. I'm going to merge 1 hour and a smaller time frame, right? Now, what we'll notice is let's look at. Let me shrink the chart so that I can look for a very good place to explain from. Remember that, market is on an uptrend, right? Market is on an uptrend. Okay, let's start from here. Let me just pick anywhere. In this particular zone here where you see gold, you see that this place is a range. Right? But let's see. Now, after this point, look at this point here. This point here is the most recent low. Is the place where, sorry, I'm trying to mark it. Just stay with me here. This place here is the most recent low. This place up here is the most recent high. So this is the most recent low here. This place here. Abi, this is the most recent high. This market was ranging, right? Market was ranging. And they say when market is ranging, it's troublesome or whatever. Now, look at this was the most recent high, most recent low, right? So before we even take any move in this market or whatever, we want price to break it. We want to see a break. Good. Now, let's see it. Now, Somehow, in this case, price was able to break. Price did not break above here. Price came down, price range, price gave lower low, price range, price gave this. Price was able to finally break this thing here. Now let me zoom in so that you will now see it very well. Look at all this range that happened here. Price broke it here. Price broke it, isn't it? What did we say? When price breaks, there's an opportunity for us to look out for a further sell. This is on 1 hour. We saw this thing on 1 hour. Now, price breaks. I want to look out for a sell. But instead of looking out for a sell, we know that there's a high chance that price is going to retrace. Price is going to retest that place it just broke before selling from there. We expect that price will retest, price will return back to that zone it just broke, and from there price will what? Price will come down. So yes, I want to look out for a sell. What do? I easily just mark that zone I'm looking out for. This is the zone. This is the zone. So I'm waiting that when price retests that zone, I will be able to see a sell opportunity. Now, that zone that we just saw, let me now go and look at it on a smaller time frame, right? So now, price now bought into that zone, right? Price bought into this zone here on 1 hour. As price bought into this zone on 1 hour, I will now go to 15 minutes. I'll go to 15 minutes. We will now see if there was an opportunity there for us. I want to start from the time that price even entered that place. Okay, this is it here. Price traded into this place, isn't it? This is on 15 minutes. Remember, we have marked that place. We say, oh, when price retraces into this zone, when price retests this zone, that's where I will sell from. Oh, price has done that now. Price retested into that zone. We will now be watching. Remember, we want to sell. So we'll be looking for the most recent structure around that place. Oh, this is how price traded into this place, right? Where is the most recent structure here? Where is the most recent low that price broke from? This is the place here. This is the most recent low, guys. Look at it here. This is it. This is it. As price was buying on 1 hour, as price was buying and price, let me take it again. Let me take it again. Oh, okay, okay. Because this is where we are looking at. Sorry, this place here. Now let me take it again. Remember that all the while we had a structure here. Price could not break this place. Price could not break this place. Price finally broke it. What does our rule say? Oh, now that price has broken it, we expect for price to retest that zone and sell. Now, price now buys into that zone. What I'm now saying is that you can even use a smaller time frame to confirm when exactly to sell. So from this zone now, I now enter 15 minutes and I've marked that zone. I've marked that zone. So let's go to that place that I marked on 15 minutes. Then we'll now see when we get to that place. Remember, we want to sell. Yes, we want to sell from this point. What we want to do, what we want to take advantage of is a sell within this place here. So our question now is, as price is inside this place, we are looking for the most recent structure. Once price breaks that place, we'll be able to take a sell. Now let's ask ourselves, as price entered into this place, where is the most recent low that price must break? This is where price is buying. We want to look for a sell opportunity. Where is the most recent low? This is the place here. This is the last low that price took before it went into this place. So we are waiting for somehow for price to break this particular point. When price breaks that point, we will be able to now confirm that sell that we saw on 1 hour. So this is the last point here. Okay, now price is trading. Price is trading. Price is trading. Okay, price has not broken below it. But somehow, what does price do? Price comes, price breaks below it here. Once price breaks below it here on 15 minutes, what happens? I expect, even on 15 minutes, for price to retest it. Price retests it, and then I can take advantage of that sell to the downside. So even remember that the first one we did, we saw very good sell or very good move because we compared daily time frame and 1 hour. This one now we have compared 1 hour and 15 minutes. On that 1 hour and 15 minutes, price was at least able to give us over 100 pips of sell on gold. So even somebody who wants to compare smaller time frame can do that. Just working with market structure. The thing is just that since I know I'm taking this trade on 15 minutes, I do not want to stay on this trade as long as a trade I'm taking on 1 hour. You understand? Because so in this case, price from that place, as price broke that place, immediately the next candle retested that place and price fell from there. A break of structure. Now let's also look at it. Let's look at different places. Let's look at another point again. In this particular point here, in this place here, still on gold, right? Then we'll move to another instrument. Still on gold. This was the last structure here. This was the last structure. This is the last high point that price was finding it difficult to break. Then somehow price broke above it. What's the next thing we tell ourselves? We tell ourselves that, oh, since price has broken above this thing, there's a high chance that it's going to buy. But I will wait for it to what? To retest. Remember, I've said if there's anything you have learned today, you've learned this. It will help you so that you are not just too dependent on, you cannot, you somehow the only time you can trade is only when there's high impact. No, with this, you can trade every time. You can trade on different instruments. Now, price broke this place here. See, you see this candle that pushed up like this and came back. It's not a break, right? This is where the market broke because the body of this candle broke it. So price broke here. So wait for price to retest it, right? So my question now is that now that when price now came into that zone, as price retested this place here, okay, as price came back on 1 hour, I can go to 15 minutes and still confirm, or even 5 minutes or 30 minutes. I can go to a smaller time frame and confirm. Me, the way I do it, I like to skip one time frame to the other. Like if I catch something on daily time frame, I skip 4 hours, I look for opportunity on 1 hour. If I find something on 1 hour, I skip 30 minutes, I look for opportunity on 15 minutes. So now that price has come back into this place, I can now go to 15 minutes. You see this sell that has happened here? I want to buy. So I can go to 15 minutes to tell when the structure breaks so that I can enter that buy. That's what I'm saying. So I go to 15 minutes. Bam. I go to 15 minutes. This is the zone. This is the zone that price broke into. Right? That is the zone that price broke into. Very, very simple and clear. This is the zone that price broke into. Right? Let me show us again from 1 hour. So what I will do now is I'm going to mark the place. Oh, sorry. Good. So this is where we are looking at when price retested it, right? This is the place we are looking at, this zone here, because price has broken it, price has retested. Now I want to check on 15 minutes to see the behavior of the market around that place, right? So I'm monitoring it on 15 minutes. This is that place. Remember, I am looking out for a what? I'm looking out for a buy. I'm looking out for a buy. So my question is, now that price is in this zone, where is the most recent structure? Remember, I want to take a buy. So since I want to take a buy, I need to look out for the most recent high. The most recent high that price had before it came here. This is that place here. Look at it. This is the most recent high that price made. This is it here. Just give me a minute. Okay, so let me take that again. Sorry for that. So remember that price has entered into that zone, that retest zone on 1 hour. Now I want to even use a smaller time frame to confirm when to buy. Now that price is here, I ask myself, where is the most recent high that price made before coming here? It is this one. So what I'm looking for is for price to break this place. And price range and range and range and range. Price eventually broke it. You will see. You will see. Price eventually broke this place somewhere here. Price broke it here. And so immediately price broke it. Price retest into that place and I can look out for that buy opportunity. Oh yes, you see, the reason why you can find opportunities at night. Yes, because it's about market structure. So what the highest thing that will happen is that at night, market may not move so fast, but it will move. And the good thing for you is that you're at a point where your risk is less as against somebody who just enters just because there's a green candle or just enters because there's a red candle. You understand? So this works for, yes, it works. It doesn't now favor. This does not work 100% of the time, but it works at least 70 to 80% of the time. And for the other 20% it doesn't work. The good thing is that you entered at a zone that is not too far from where you can put your stop loss. You understand? So your risk is less. And that is why it is now easy for you to make more than you lose, which is what trading is about. Trading is not about making 50 million naira on the first trade. Trading is about making consistent net profit. And yes, once in a while you can hit it big, beautiful. But even when you hit it big, your strategy, your behavior to the market is not supposed to change. And so this can also work on phone, because you can see I've not used any indicator here. I've not used any indicator here, so you can take advantage of it. You guys, uh, I will just simplify it here. What we did is, first of all, you need to be aware of the trend. When you note the trend, you now need to make sure that when you note the trend, you now make sure you can tell where the high, where the low is. Anytime price breaks structure, breaks any high or breaks any low, you don't just enter immediately. Let the market retest. When the market retests, that is when you can now go in to take the trade. Also, we said you can combine a smaller time frame to confirm the exact moment or the exact price zone that is nice enough for you to enter. That's the summary of what we have talked about. And we said that this one, you can apply it to even your strategies, your trading strategy, you can apply it to it. Do you understand? So yes, of course, it's a retest of support and resistance. So you can apply it. Even whatever strategy you are using, you can apply this to it. Personally, one strategy I love using anytime I'm trading currencies, especially one strategy I love using is the RSI divergence strategy. I love it. And I've thought about it. It's even on our YouTube, RSI divergence. But imagine using RSI divergence with this strategy. What does that mean? My RSI, when I apply my RSI on my chart, whenever price is giving me a higher high, okay, if I'm using the RSI, I always compare the highs and the lows of the market. I compare the high of the market, the low of my, let me show what I mean. I'm not teaching you RSI strategy. I just want to tell you how knowledge of this market structure helps you with whatever you want to do. It actually helps. Now let's look at it. And at least for the person who said, can you do a analysis or something like that? Look at GBP USD, guys. Let's look at this high. This is the high of GBP USD, right? Let's look at the high of my RSI. My RSI, although it's kind of, it's even, this one is even almost equal. Even if the high of this market, if I even turn this to a line chart, you see that the high of this market is giving me a higher high. It's giving me a higher high. Let me look for a better example so that we can really understand. Let me look for a better example. Remember that I'm saying if you're dealing with RSI, you're talking about the RSI divergence strategy or whatever strategy. I just want to show you how I can apply market structure, how I can apply my knowledge of market structure into any indicator, any strategy that I have that I'm already using.
Any strategy I'm already using, I can apply my knowledge of market structure there. Look at this. Look at this. GBP USD. This is a higher high, right? Higher high. But my RSI at that same point is pointing downwards. My RSI is pointing down. So normally when we see a strategy like this, it's telling us that the market will sell. That's what it's telling us. Telling us the market will sell. Okay, yes, the market will sell, but I'm not just going to start selling immediately. So I ask myself, where is the most recent structure in this market? Where is it? This last high that happened like this, where is the last low that pushed it like that? Guys, you do understand? I want to sell. My strategy is telling me to sell. But the question now is that, oh, this sell I want to sell. I need market structure to confirm it for me. So I ask myself, where is the last low that sponsored this? It is here. This is the last low that the market made. This low here. This is the last low. This is the last place price sold to before it pushed all the way up here. So this is the last low. So yes, I want to sell GBP USD, but price must break that my last low. And that's what happens here. Can you see it? Very simple. Price breaks it. What does price do? Price retest it. I can sell from there. Beautiful. If I even want, as price retested that place, as price retest it, I can also go again, check it on a smaller time frame. You understand? I can check that place on a smaller time frame. On 15 minutes, for example, I can check it. I want to sell. So I will be waiting. Oh, yes, I want to sell this thing. I want to sell it. Here that price is, I want to sell. Where is the last low that push price here that I wait for price to break? It is here. Ladies and gentlemen, this is it here. This is it. This is it. So what happens? I wait for price to break this place. You see how I'm confirming? I'm using 15 minutes to confirm 1 hour. Price breaks it. Price returns towards it. I sell from there. And price falls to my favor. Price sells to in my favor. You understand? So it helps. It helps. Okay? Like I've answered, I said there is no record, but this is what we are going to do, guys. So if there's anything you remember from today's session, don't forget retest, retest, retest. Now, guys, we're going to be having, we had a session like this last month. We had a session like this, and we're having the part 2 in this month. But it will flow from this month into next month. We're going to be having 3 weeks 3 weeks of special training on SMC. We are going to talk about this market strategy. We're going to deep dive into it, talk more on fair value gap, talk more on other blocks, talk more on how to get pinpoint entry accuracy. Remember, this one I've taught you is even beautiful enough, but we are going to be having a 3-week special, and it's going to start next week Wednesday, that this coming Wednesday. The next 3 Wednesdays we are going to have that session. This Wednesday, the next 3 Wednesdays we are going to have that session. So we will do it Wednesday, the next 3 Wednesdays, and for those who will not be able to attend, we will also have it we'll do it Wednesdays. Next Wednesdays, then we can do a review on Friday. So it will be Wednesdays and Fridays. Wednesdays and Fridays, because some person may not be able to attend on Wednesdays. Wednesday and Friday. We're going to having it for the next 3 weeks. That means next week Wednesday, the next Wednesday, like that. So 3 Wednesdays. We're going to have 3 Wednesdays where we do deep dive on SMC. Now, that class is not going to be for everyone. That class is going to be for people who have at least ₦1 million in their trading account. So what does that mean? It means that if you want to be a part of that class, you want to join me in that class, you need to have ₦1 million in your trading account. If you have 700K, top it up with 300,000. If you have 200,000, top it up with 800,000. If you have 1 million, 1.5, beautiful, you can attend the class. Okay, so that class is going to be, you're not paying for the class. Okay, it's a free class, but it's going to be for people who have at least ₦1 million in their trading account. Okay, for those who do not, don't fight me. Oh. Don't fight me. God will provide. But you see this one that I've taught you, go and work on it. That's just the truth. But if you can, it's just funding your account. Even after the class, if you feel after the class, oh, you don't get it, just like in our practice, you can take it out. But I'm sure that what we are going to be doing um is going to be very special. It's going to be for a few. It's going to be special because after the training, I will be giving personal systems that I use to easily identify these things. I'll be giving some personal things that I use during the class, okay, with personal follow-up and all that. So make sure that in the coming week, before the next Wednesday we are having, that you can top up your balance to ₦1,000,000. Please, when you top up your balance to ₦1,000,000, just let your account officers to reach out to me. We will send you the personal link for the class. We'll send you the personal link for the class. So make sure, do as much as possible to take advantage of this opportunity. Okay? Make sure you take advantage of this opportunity. Funding your account, you're topping up your account to ₦1,000,000. If you have 950, put 50,000. If you have 0 naira, you put ₦1,000,000 to attend that class. That is how it will go. And we'll have that class for the next 3 Wednesdays. Okay? To be a closed group class, we'll have it for the next 3 Wednesdays. The link will be shared with you by your account officer once it is confirmed. Okay? And then in that class, materials will be given, all that and all that and all that. So let us make sure that we are on that page, right? Then for the purpose of this class and these things we talked about, we are going to have this. We're not able to do the recording of this class. We had some technical issues, and because it's going to cost so much size, it will even be hard for us to send to. So what we have done is that we have done a kind of YouTube session to explain this. So that will be available. We're just having there are a lot of things we are doing. So it's just been hard to edit it and put it up. But we should have it on our YouTube channel this coming week. Once it is out, we'll put it on our WhatsApp channel. Okay, all these ones we've talked about, we're going to provide it on our WhatsApp channel so everybody can have access to it. Please, I hope everyone here is on our WhatsApp channel. Okay, if you're not on our WhatsApp channel, reach out to your account officers for it. You understand? So this one we have done today, I will do a YouTube training on it that will be uploaded on our WhatsApp channel next week, God helping us. I really hope I can do that. Okay. But to take advantage of the exclusive class, reach out to your account officers, make sure you have a balance of ₦1,000,000, and you'll be hearing from me on Wednesday and the next 3 Wednesdays. Okay. Is well. See, I would okay if you don't have the WhatsApp channel, just talk to your account. Okay, let me even get it. It's not a problem. I can provide. Oh, very good. Oh, guys, this class is even on. This class was live streamed, so you can check it. You understand? You can check it. Okay, you can check it, right? This person is really wow. To go and steal. I've not told you to go and steal. Oh. What I've said is that there is a special class for some persons. If you cannot take advantage of that, you can take advantage of this one that we did. You understand? We should also make sure so that I don't feel like because when when you see comments like this, it feels like I just wasted my time. It feels like I just wasted my time, but I'll not let you get to me. Because you just look down on what you have spent over 1 hour learning. Even go and practice the one you have now. The fact that you don't have ₦1,000,000 to fund your account with now does not mean you will not have it. So nobody is looking down on you except you're looking down on yourself. You understand? All these opportunities appear every time. If you cannot take advantage of this one, you take advantage of another one. Just imagine I called this meeting, I did not teach you people anything, and that's what it's sounding like. Sounding like you were not taught anything. God help you in Jesus' name. Amen. So, but the truth is that you need to be honest with yourself. If you can take advantage of this class, this is a business. This is a business. And Rally Trade has been able to time without number prove that they are very much interested in your education. You are not paying for the training. Some people will put this money in their account. After the training, they will take it out. So what are we saying? You understand? You've had very, very important. Me, I know what I've taught you. I know what I've paid for what I've taught you. So don't even worry about that one. Eh? Just head over to our YouTube channel. You can find the live stream of this training. You can go over it again. Okay. But personally, I would even put out a specialized training on YouTube this coming week. Okay. But that said, guys, if you can take advantage of that special training we'll be having next week, make sure you do that, right? Make sure you do that. It's for your own good, right? So I'll be looking forward to having us. The link to for that particular class will be communicated next week. Okay, it's well, eh? Don't worry, God will provide for all of us. Then for the WhatsApp channel link, let me get it. Let me get. Oh, it's been dropped, guys. The WhatsApp channel has been dropped. Thank you. Please scroll. Oh, there is the WhatsApp channel there. Okay, there's a WhatsApp channel. So make sure you join the WhatsApp channel because over the course of the next week, videos and trainings like this will be put out. Okay. So make sure you join the WhatsApp channel. Okay. As well. God will help us. Okay. So don't worry, guys. It's fine. It's fine. So thank you so much, guys, for your time. You people were amazing. You were amazing. It's not easy. You take your time to be out here, but I want to believe that you've been able to get value for your time. You understand? Please, what I want you to do, if you finish this training now and you just go and sit down, you will forget it. Oh. If you finish this training and you don't go and practice it, you will forget. So don't stop. Don't go on your laptop. You understand? Go on your laptop or go on your system and try to practice as much as possible. You understand? Don't even allow 2 3 days to come in between you and this class. You understand? To come in between you and this class. So please make sure you take out so that you don't forget. You understand? How much have you made from this thing? Well, I've made enough. I've made enough to be on my own. Dollars. I think dollars will be around right now. That would be around $700 or thereabout. As well. See, don't worry, guys. Just I'll drop my number. I'll drop my number. Just have this mind, eh? Just mind this mind. This is not. This is a promotional package. You understand? The company also needs capital. The company needs lots traded and all that. But we are not we are not saying that you will not get. You've gotten value for today's class, and you will. Instead of talking like this, the way me I look at it is that very soon each and every one of us will be able to get to that point where when somebody calls 1 million, will his 1 million is not even up to $1,000 anymore. But I understand how things are. But don't worry, very soon they'll call 1 million, you drop it and walk out of that place. What are you saying? So God will provide. Okay, this is my number, guys. This is my number. This is my number. This is my number. This is my number. So please reach me on WhatsApp. I'll prefer WhatsApp. Okay. I'll prefer WhatsApp. I mean, not. Oh man, I just. So I dropped my number. Just yes, we'll do the repeat training. Okay. As well. Rennie, thank you. Douglas, thank you. My name is Samuel. Samuel. So it will be fine. I totally understand how difficult it is, especially now in the economy. I know the training on Wednesday, most likely will be by 2 o'clock. It will be by 2 o'clock. God will provide. You guys will. There are some names here, like someone like Mr. Fanio now. He's you are, I know him. I know him. So it's well, it's well. It's well. So you guys just need to make sure that you put the time to learn. The time to learn. The skill to make money is in your hand. It's a matter of skill. It's a skill thing. It's a skill thing. So learn. You understand? Okay. For the thing about time, we'll look into it. We'll look into it. If 2 p.m. is not favorable for a lot of persons, for those persons who will be joining the class that Wednesday, we'll fix a more convenient time because it's all about you guys. You are the one we are doing the training for. So we'll do an aggregate, we'll do a sample. You understand? By Monday, by God's grace, we should have confirmed a more convenient time for us. You understand? As well. As well. Ah, Otam, Avosa. I'm not a woman, no. But yeah, I get that a lot. I don't know. It's the voice, Jerry, as well. Okay, okay. Olusegun, thanks for the advice. Recorded class. Yeah, look into it. Ojidan, thank you. Guys are already dropping messages for me on WhatsApp. Thank you. I would attend to you guys as soon as I'm done. If you go to YouTube, you want to see it on YouTube, go to live, go to the live playlist, the one that is live. You see it's the last video. But if you don't even see it, don't worry. By next week, I'm even going to do another one on this. I will do it by next week on our YouTube channel. LC, oh LC, hey, what's up? Yeah, yeah, price action. All these things we're talking about, that's price action. Price action is not one particular strategy. It's just any strategy that you do looking at the chart, especially without using special indicators, looking at the naked chart, that's what price action is. So I can tell you, Mr. Lawrence, that you also have an idea of price action too. This is the link to this live stream that we just had. So this is the link. So you can follow it. Oh, sorry. Okay. Okay. Thank you, Unique. Thank you. Thank you for that. Okay. Bless you too, Miss Lawrence. I've dropped the WhatsApp link again. Okay, thank you, Infinix. I'm calling your phone this. Well, thank you. Oh, sorry about that, Wisdom. Sorry about that. Just check that. Thank God you had to join through YouTube. Thank you. Next week is for those who have a balance of ₦1 million. Yeah. God bless you all. God bless you, Mr. Adekunle. Thank you. You guys are amazing. Oh, Moses, you are a beginner. Okay, so this must have been very stressful for you as a beginner. But I think I'm sure you can pick up on some of the things you did. This is what you do, Moses. You need to still work on some basics. So you just reach out to your account officer. Reach out to your account officer. He or she will provide you with those basic materials that we have. You understand? Provide you with basic materials. MOJ, this MOJ, we need to talk. I'm very glad that you really helped me today. So please, personally reach out to me, please. I just sent you a direct message with my number. Okay? I just sent you a message. So please reach out to me. MOJ, yeah. Please. I want to hear from you. Let's talk. Ah, Victor, you're just joining. And Victor, if you're just joining, just head over to YouTube. Head over to YouTube with this link. I'm just dropping a link now. Head over to YouTube, and then you can use it. Yeah, if there are trading opportunities, why not? There are trading opportunities, of course. Well, I would really prefer that you learn how to trade yourself, you know, than someone trading for you. Um, I can, I can easily just tell you that I'll trade for you and collect money, Abby. But I feel like it's better you learn yourself. But yes, if you are interested in somebody trading for you and all that, you can also work with um our copy system. We have a copy platform where we have some traders here that you can actually follow. Okay. Oh, MOJ, your oh Victoria. That's my G. No problem. We'll connect. Yeah, well, the company does not oh, okay. I get your question now. The company does not trade. Oh, Moji, okay. Sorry. The company does not trade for people. It's a brokerage firm. So it doesn't actually have the right to have to trade for people. You understand? So you can only use it's things like copy trading, automated trading, all all of these things are things. But like I said, I personally feel you get the best result when you learn by yourself and trade yourself. Okay, Olusegun, just reach out to me on WhatsApp. Well, Esther, I'm not a big robot person, but reach out to me because I don't. I'm not big on trading with robots. I feel like I have one or two which I've not even given anybody, which actually works for me, but I'm not big on trading with robots. But you can reach out to me because trading with robots is just a function of capital. That's the thing. Some of the things you can do easily with $100, $500, even $1 million. It may be hard for you to do it with a robot. Someone wants to trade with a robot. I'm telling you, you need very good capital, very good capital. So that's why. But yeah, you can reach out to me for that. Okay. Thank you so much, guys, for your time. I need to go. I have a lot of messages on WhatsApp that I need to go and attend to. But thank you so much. You have my personal line. You can reach out to me, and I will attend to you as soon as possible. Thank you, guys. Enjoy the rest of your weekend. Please try and rest. We will talk again on Wednesday. God bless you all. Bye for now.